Okay, so let's kickstart today's session. Right, so for those of you guys who just joined us, today we will be covering on how we can use Fibonacci retracement, both in terms of support and resistance, and also how we can apply them across the different time frames. Right, so we will be taking a look at a few examples on Aussie dollar for that, right? And if you guys have any questions along the way, please feel free to put them under the questions chat. Okay, so just a quick introduction of myself. I'm Lee Sing. I provide FX advisory to institutional clients, right? You can also find me on LinkedIn. So if you guys have any questions with regards to the sessions done on Wednesdays, Thursdays, or Fridays, right, please feel free to put, if you're with us live, right, put it under the questions tab. If not, please feel free to reach out to me on LinkedIn. Just a quick disclaimer before we get the session started. The information presented here is not to be treated as investment advice. It's for educational purposes only. So along the way, if I'm going too fast, right, or too slow, right, please feel free to put them under the chat box as well. If you guys have any questions, please put them there too. So this is the agenda that we will be covering for today, right? So we will take a look at the charts on TradingView, mainly on how we can use Fibonacci retracements and also confluence levels to identify high probability setups. So this would actually be a continuation of the previous two Thursday sessions that we had, right? So we did Fibonacci retracement and covered on how we can use Fibonacci retracement to find support and resistance level. I will provide a quick summary of what we have covered in the previous two sessions, right? So for more in-depth sharing, please take a look at the YouTube videos. And then following this, right, we will move on to see how we can actually use this Fibonacci retracement on different time frames, right? So we will combine market structure as well as Fibonacci retracements and supply-demand areas. And then finally, we will talk about premium and discount zones, right? So understanding the idea behind them. Okay, so I have a question, right? So could you provide the link for the previous two sessions? Thank you. Okay, so let me just get the link real quick. Right, so you can actually just go to, let me just bring out my tab so that's easier. Right, so just go to Vantage YouTube, you should be able to get this. Right, so we actually have previous recordings here. Just give me one moment while I bring out the new tab, right? So on Fibonacci retracements. Okay, so this is the tab. Right, you can just go to Vantage. Just go to YouTube, right? Search Vantage. And over here, right, you will be able to see the Fibonacci retracements extension. So this would be the Fibonacci series. So we have one here. So I just send this link over. This is the first one. Okay, so I put the link under the chat, right? And the next one that we had, it's this area here. I mean, sorry, this link. Yeah, this is the next one. Okay, so I've sent both links in the chat. So you guys can take a look at that. So those are the Fibonacci retracement sessions. Okay, so let's take a look at what we have now. Okay, so those are the two links, right? So for those of you guys who want to check out the previous session, I've typed the links under the chat box. Okay, yeah, so the next thing that we want to look at, right, would be on premium and discount zones, right? So essentially understanding how we can combine all these three concepts and take a look at examples on the chart. So I'll just bring out an example right now, right? So, oops, sorry. Right, so let's go on to TradingView. Okay, so on TradingView first, right? So just a quick summary on Fibonacci retracement. So in general, right, if you want to use Fibonacci retracement to find support, what you need to do is to identify the moves, right? So for example, in this area, right, you can see that price pushed up. It did a pullback, right, and pushed higher. So in this case, right, essentially what we're trying to find here is to see if there are any levels that price could potentially pull back to. So in this case, you can see that first thing on market structure, it's forming higher lows and higher highs, right? So this is the last high. Price, the low over here, took out the last high. It broke above. So in terms of the recent market moves, at least on the daily, you can see that it's still in a bullish market structure with higher highs and higher lows being formed. Another way you can determine this is just take a look at it in terms of line chart, right? Just identify the significant reversal points. You can see the highs here as well as the lows here. So in general, you can see that if you were to mark out just the highs and lows, prices are still forming your higher highs and higher lows, right? Hence the bullish market structure. So what we're trying to find is that for price to pull back into a potential support area before it continues to the upside. So for that, what you can do, it's essentially first is to identify supply-demand areas. So for supply and demand areas, right, this is important, right, before we start our Fibonacci retracement. The reason behind this is because if I were to just load the Fibonacci retracement tool, so this is a Fibonacci retracement tool, right, I'll just set it to the default. Okay, so these are the default ratios. So you can see in this case, right, at almost every interval, there will be a Fibonacci retracement level. So these are the Fibonacci retracement ratios, right? It's the default, they're the default levels provided on TradingView, right? So if you just take out this tool, right? So it's called Fib retracement under the third icon. So you can see that at almost every interval, there is a level, right? So which is why we try not to just take it in isolation, but rather we want to make sure that at this level, it's also in line with a supply or demand area. So that's the first thing to take note of, right? So in terms of supply and demand area, right, the next question is how do you determine them? So again, for supply demand areas, right, the easiest way to identify them, right, it's basically by taking a look at zones where prices interacted with, right, several times. So what I mean by this is that, take for example, right, if I were to highlight this area, you can see this zone. You can see how many times prices tested this area, right, as either a support or resistance level. So you see how price came into these areas and rejected these levels. And if you're to just draw a horizontal line across, right, you can see that it actually divides this chart very neatly. So it separates the top and bottom very nicely. So this would be a potential area to look at. Usually for this area, I start off with the higher time frames. So higher time frames usually give us a clearer picture. So an example of what I mean by this is that on the higher time frame, right, so the weekly, so weekly would basically mean that the open and high low close prices, right? So each candle represents the movement in prices for that week. And then for the daily, right, essentially each candle represents the price movement, right, capturing the open, high, low, and close prices for the day itself. So in this case, you can see that when you take a look at these zones on the higher time frames, right, it's less choppy. It's also clearer as compared to maybe taking it on, let's say, the 5 minutes or 1 minute. You can see that at these areas, right, supply or demand areas or resistance areas, in this case, right, this can be very choppy with slight reaction here before it just broke below. So it's important to take note of these zones, right, on the higher time frame first. So once I've highlighted this zone on the higher time frame, so take an example, this area here. The next thing you want to do is to try and find if there are any Fibonacci retracement levels lying here. So for Fibonacci retracement, right, so in this example, you can see that current prices are testing. It's currently sitting above this blue zone, so which makes this blue zone a support area, right, or demand zone. So once you've highlighted the area, the next thing that you want to do is to use your Fibonacci retracement. So for Fibonacci retracement, right, how you can actually go about doing it is to first identify the impulsive move. So in this case, you can see that price pushed up before it pulls back, right? And when price moved up, this is basically the lowest price, right, of this whole move, and this is the highest price of this whole move. So if you want to use Fibonacci retracement to find support, right, so the idea is to see if there are any levels on the Fibonacci retracement that lines up with this zone. So in order to do that, what you can do is first identify the lowest point, right? So use the lowest point and the highest point. So that's what we're going to do right now. So we will take the Fibonacci retracement tool, identify the lowest point and the highest point. So you can see in this example, right, the two Fibonacci retracement levels that line up with this blue zone that we found, right? So one would be the 38.2% and the other would be the 50%. Okay, so I'll just remove the rest of the levels that are irrelevant, and we will just keep the 38.2 and 50%. You can see that it's the zone, right, where prices are currently testing. So this is how you can use Fibonacci retracement to find support. If we are going to take a look at Fibonacci retracement to find resistance, it's the other way around. So if you want to use it to find resistance, right, essentially we need to identify the move down, right? So when you want to find support, you always start from a low and end at a high. So this is to find support. If you want to find resistance, it's the other way, right? You need to start from a high and end at a low. So using the same example, you can see that this would be an example. So if we want to find if there are any cause of reversal here at this point, what you can do is to identify the impulsive move. So this is the impulsive move, and we are seeing that pullback, right? And this slight reaction here. So in this case, right, having identified this move, you can see this push down. This would be the high of the move, and this is the low of the move. So when you identify this move and take a Fibonacci retracement using this high and ending at this low, what you're trying to do, it's basically to project at certain price point, right? So at a specific level, right? If there's actually a Fibonacci retracement here that coincides with a supply area, and this can act as a resistance, right? Signaling this move down. So in this case, right, if you have to take a Fibonacci retracement starting from the high here and end at the low, again, I just want to open up all the retracement levels. You can see in this case, right, 78.6, its price actually broke above it. There is another level, right, so 88.6, right, so this is another Fibonacci retracement level that you can take a look at. So in this example, you can see that, let me just add this, right, so it should be 0.886. So in this example, you can see that the 88.6 retracement is the one that's being respected. So let me just again remove the rest so that we just keep one that is relevant. Okay, so this is the area here, right? So again, right, you can see that almost at every level there is an interval, right? I mean, at every interval there is a level. So which is why you need to make sure that when you're drawing this retracements and extensions, right, there are also supply or demand areas that are being followed as well. So in this example, you can see that this would be the supply region, right? So essentially, again, an area where you can divide the chart neatly, right? And price tested both the top and bottom. So you can see in this case, let me just remove this marking so that we're able to see the chart clearer. So in this case, you can see that this area, right, essentially, there is a resistance area here. So you saw how price tested as a resistance came in, right? And there is this small doji, which shows that there's buyers, right? But there's lack of buying pressure to push prices higher. So following which, right, price just pushed lower, tested again as a resistance. And right now it's in this zone again here. So this area, right? So this is the picture on the daily time frame. So you can see how, right, in this example, you can take a look at how you can use Fibonacci retracement for both support and resistance. The main difference is that for support level, you need to identify the move up and use the low as your starting point, the high as the ending point. Whereas if you want to use Fibonacci retracement to find resistance, right, so essentially looking for an area here, which caused this reversal in price, right, you have to identify the high, right, so the highest point and the lowest point as the ending point. So highest point would be your starting point and lowest point would be your ending point. Okay, so this is just a brief summary of how you can use Fibonacci retracement, right, in your highs and lows. So the next thing that we want to do, right, having understood how we can actually take a look at a Fibonacci retracement, the next thing we want to do is to see if there are any Fibonacci confluence levels that line up here. So what I mean by this is that having identified the support area, so you can see that currently prices are testing this support area here, right, it's currently sitting on this daily support, you can go down to the smaller time frame, right? So it can be on the 4 hours, the 1 hour, right? And take a look at the recent price development. So in this example, right, you can see that this 38.2% and 50% that we have over here, this is actually the Fibonacci retracement that it's taken from the daily time frame. So recall when you're on the daily time frame, right? So let me just move back to the daily so we can take a good look at this, right? So this is actually the reference point that we took from, right? Because this is the whole move up and we're seeing that slight pullback. So essentially on the daily, the points that you're using is this low here and this high, right? And also you're taking a look at basically how price interacted with this daily zone. So this is the daily picture. If you go down to the smaller time frame, you can actually find other Fibonacci retracement levels that line up there. So let's take a look at the 4 hours example. So on the 4 hours, right, essentially what we're trying to see here, it's to see if there are any levels, right, that coincides with this daily support level here. So what you can do, right, it's again, right, take a look at the retracement level. So this, if you're on the 4 hours, right, you can actually divide this movement. You can see that this is actually a whole push up here, right? So you can also take a Fibonacci retracement from this low and this high, because this is the last push that we have before that pullback, right? So this is one way you can take a retracement level. So again, starting from low here and to the high. And then likewise, right, you open up the key level. So I'll put this in a different color so that we can actually differentiate the daily and 4 hours retracement. So in this case, you can see the 61.8 retracement, right, lines up just slightly below. It's also in line with this daily zone. So the idea behind this is to show how you can actually, across different time frames, right, take the retracement levels, because on different time frames, the starting point, right, for the support levels will be different. On your daily time frame, your starting point will be here because this is the bigger move. If you're on the smaller time frame, you can see that the starting point can be the most recent move, right, the last impulsive move up here. But at any case, right, if you want to take a look at this example, the ending point is the same, right? It's always the highest point, which also means that when price, right, so assume that price actually pushes up to form a new high, then in this case, right, this retracement level itself would not be valid. The reason why it would not be valid is because if price push up to form a new high, right, then you have to take the reference point, right, using this new high that's being formed. So at any point in time, right, when we're trying to find retracement levels for support, you need to ensure that the highest point, right, so this is the highest point, to the right of the highest point, there isn't a new high that is being formed, right? Because once that happens, then in this case, we will have to shift and you take a look at the new high. Okay, so this is for support. If it's for resistance, right, it's the other way around. So again, right, let's take a look at this example. I'll replay this slightly so that we can see this example here. So for example, if price comes into this level here, right, so essentially, this is the push down, right, and you're seeing that pullback within this leg itself. You can see this is the new high, this is the low, right, and price pulls back into this zone. Essentially, if price is trading within this leg, right, we can take a Fibonacci retracement to find resistance using this high and this low. Okay, so this is a valid retracement until the high itself, this high here, it's broken. Okay, so when price has this level, right, you can see here. So when I take a Fibonacci retracement of this move, right, Fibonacci retracement from high to low, again, right, let me just open up the different levels. So you can see in this specific example, right, the 88.6%, which is basically this resistance area, lines up with this reversal point. So this is valid until price actually forms a new high. So if I were to just continue playing back, you can see that following which, right, so at this point when price breaks above, it forms a new high, then this retracement level that you took, right, with this reference point, this is no longer valid. Okay, so just something to keep in mind. So in this case, right, this is basically a summary of how you can use Fibonacci retracement, right, and also on different time frames. So we take a look at how we can actually mix the daily retracement level with the 4 hours region. Okay, so using the same example, right, I want to take a look at this. So let me just remove the rest, right? So now there's another way you can also do this, right? So let's take a look at the higher time frame first. So as always, right, I usually use the higher time frame to identify, right, identify the general direction. So maybe not so much on Aussie dollar, but let me take a look at franc yen. So in this case, you can see right? Using the same example, so let me just remove all these drawings. So first on the daily or the weekly, right? Essentially, you can take a look at whether prices are currently sitting on a support or resistance area, right? So that's one. So you can see on Frankian, right? There is this resistance area here, or resistance turn support area, seeing how price reacted as a resistance and then it continued higher. And right now we're pulling back into this area here. So this is the picture on the weekly time frame. So having identified that, the next thing you want to do is see if there are any Fibonacci retracements that line up here. So this is the push up, right? And then we're seeing that pullback. So essentially the push up, if we are trying to find Fibonacci retracement for this support level, you need to identify again, right? Start from the lowest point. The starting point would be the lowest point. The ending point would be the highest point. So this is one, because this is a push and a pullback. So this is one retracement level we can take it from, right? So let's take a look at whether there are any retracement levels that line up with the blue zone. So Fibonacci retracement of this move, right? So again, in this example, right, you want to take a look at the key level. So in this case, right, you can see 61.8 is running slightly higher, whereas 78.6 is just slightly lower. So this zone itself, right, there isn't any Fibonacci retracement from this point that lines up specifically with this blue area here. But you can see that it's holding in between the 61 and 78.6. The next zone that you can take from, right, would actually be this area, right? So this whole push up. You can see this push, right, and then the reversal. So again, right, you can take a retracement of this from low to high. So in this case, right, when we do that, again, identifying the lowest point and the highest point. Okay, so again, these are the retracement levels. So these are the common ones, right? So you can see that what happens here, it's that we have the 23.6, which it's not valid. The reason why it's not valid is because you can see that price tested this area. We saw a slight reaction here, right, in terms of this small bounce. So if I were to zoom in further, you can see that price basically came in, tested in this zone here, right? And then also in line with the 23.6, we saw that small bounce before a strong push down. So essentially, right, this became a support turn resistance area, right? Or demand area, it failed and it became a supply. So the next level that we have, right, is the 38.2%, which is this level. And it also lines up with the supply region, right? So you can see price pushed up. We saw that sharp reversal, and then right now it's becoming a resistance turn support area. It's also in line with the 38.2%. So this is the bigger picture, right? So 23.6 is broken, so it's not valid, right? And the reason why it's broken, we've explained earlier, it's because price broke below that level, right? So basically from the highest point, this is the highest point, right? So to the left of it, you need to ensure that prices did not break that level. If it broke that level, it's not valid. So the next level is 38.2. So this is the weekly picture. So if you take a look at it on the daily, right? So on the daily, you can see that in terms of market structure here, right? On the daily, prices are forming a lower lows and lower highs. You can see this area here. Another way you can take a look at it, even in line chart, right? If you were to take a look at just the significant reversal point, you can see that this high itself took out the previous low, which also means that this high itself is the last leg of the move, right? Anything here is just a pullback. So what you can do, right, having identified this, right? So this is the last leg. So we want to take a look at this leg. Okay. So with that, right, on the daily time frame, or even on the 4 hours, right? So I'll zoom into the 4 hours so we can see this clearer. So you can see within this zone itself, right? This is the high and this is the low. So for Fibonacci retracement, what you want to do is identify the highest point, right? Basically what we're trying to do here is that we're trying to see if there are any areas. So you can see first, supply demand area. This is the supply region. How so? You can see how price interacted with this, right? Tested as a support and then failed it, retested this region as a resistance. And even if you were to take a look at it in line chart, you can see that I can basically draw a horizontal line very neatly across. You saw how price tested this region, the consolidation as a support, and then failing it and retesting this as a resistance. So this is the resistance zone, right? So having identified that, the next thing you want to do is see if there are any Fibonacci retracement levels that line up here. So for Fibonacci retracement to find resistance, again, this is our last leg. This is the pullback. So we need to use a Fibonacci retracement starting from this high and ending at this low. Okay, so that's what we're going to do right now, right? So I'll just take a Fibonacci retracement of this move, taking this as the starting point as the high, ending point as the low. So I'll open up a few levels, right? So you can see in this example, right, which are the levels that are valid, right? So you can see that all these levels, so this is the lowest point, So to the right of this lowest point, you can see that price broke above this region, it broke above this, right? All these levels are not valid. The only one that is still valid is your 78.6 retracement that also lines up with the supply region here, the supply zone. So it's important, right, that when we take a look at these levels, right, as much as possible, try and identify supply demand areas, because at almost every level, you'll be able to find a Fibonacci retracement. So in this case, you can see that the supply region is here, right? And the 78.6 retracement is this area here. So it lines up with this level, right? So this on the weekly picture, it shows you that there is still further downside here. And also at the same time, right, if you're on the daily picture of 4 hours, you can see that there is lower lows and lower highs being formed. At the same time, right, prices tested the supply region, and it's also in line with a Fibonacci retracement. Okay, so this is the picture on the 4 hours time frame, right? So if you're taking any short positions, right, coming into this region, again, right, you can see that coming into this region, prices will once again form higher highs and higher lows. On the smaller time frame, right, if it needs to pull back into a higher time frame zone, on your 15 minutes or 30 minutes, you can see that it will be forming your higher highs and higher lows here. So in this case, right, currently we're seeing a strong push up, and then right now, right, prices are testing. On your 15 minutes, you can see that's testing this area here. Again, resistance area, price tested this region, and then right now it's sitting on some kind of support level. So you can also do the same thing, right? So if you want to practice the Fibonacci retracement again, right now we're on a support area, right? So on the support region, right, if we do see a pullback, if we indeed see the pullback from here, for one, right, it has to form a clear structure and then break off the last high. That's one, right, before we see a deeper pullback into this zone. So if you want to check if there's any retracement that lines up here, again, there are 2 retracement levels you can take from. This is the impulsive move and the pullback, right? So you can take a retracement from here. And then there is another one, right? A push up here and a pullback. So you can also use a retracement level from here as your starting point. So these are the 2 starting points you can use from. Your ending point would be this high, basically this high here. Okay. So when we do that, right, you can see that Fibonacci retracement from low to high. This is the 78.6 retracement that lines up with the support region. There is another retracement that you can take from low to high here. And then once again, if you open up the key levels, you can see that the 50% retracement, right, this zone here, this zone, right, also lines up with the 50% taken from this smaller time, I mean the lower low that we have here, this area. Okay, so I hope that these examples are clear in how you can actually apply the different time frames, right? On different time frames, you can apply Fibonacci retracements on them, right? And also the most important thing, right, if you realize from this region, it's basically try and identify zones, right? And once you've identified the zones, then you can take a look at the Fibonacci retracement and how it can back up these areas. So the reason why I would suggest doing that instead of taking it the other way, right, just drawing Fibonacci retracements, it's because at almost every point you can see that there will be Fibonacci retracement levels. For example, if I were to take this pullback, right, you can see that at every point, so if I were to just open up the other levels, right, taken from this Fibonacci retracement, you can see that at almost every level there is a retracement level here, right? So the ones that were being respected at this point, you can see that there's only 2, right? So price pushed up, it pushed up to the 38.2%. And we saw that slight retracement before a huge push above this level, right? And then the 50%, 61.8, there were no reaction of these zones, right? And before price came into the next area here. Another thing that you can explore as well is that with Fibonacci retracements is that you can see this region, right? So when price pushed up, the first time it came into a 23.6 level here. And we saw that slight consolidation, right? Before we saw a break above and a retest of this. So this was the previous resistance, price broke above it, retested as a support before it continued higher, right? So even if we are not to use the Fibonacci retracement, right, just taking a look at supply demand areas, right? When supply fails, it creates demand. So it's the same idea. Okay, so you can see that if you're to take a look at it in terms of just the candles, right? This is the supply, this is the last candle within the zone. So when supply fails, right, then basically it creates demand. So support and resistance levels, right, it's the same idea. So you can see this candle over here, right? So price came in, reacted to it, failed above it, retested as a support, continued to the upside. Okay, so it'll be interesting if you can basically put together, right? So try and identify zones in terms of support resistance areas. And once you've identified that, right, you can take a look at a Fibonacci retracement, right? So if you want to find resistance for Fibonacci, using Fibonacci retracement, then start from the high and at the low. Okay, so the highest point here, lowest point here. If you want to use Fibonacci retracement to find support, you can identify the lowest point and end at the highest point. Okay, and then the last thing that I want to cover, it's on premium and discount zones. So essentially at this area itself, right? So assuming that when price forms a lower low and lower high, right? The assumption is that the trend will continue. So it's in a downtrend and the downtrend will continue unless there's a break of structure, right? Or break of the last high, which took out the low, which in this case would be this high here. You can see that this is the high, right? And this is the high that took out the low. So anywhere within this leg, we could still be seeing a further downside unless a new structure is being formed, right? Then in this case, we will have to reevaluate this. But basically, what I'm trying to say here is that when price comes into these zones, right, you can see that this is basically the last leg that we have and a pullback. So at this area itself, this is the last range. You can see that this is the last range between the high and the low. So at 50% of this, right? So assuming that if we are expecting price to continue lower, right? 50% of this is basically a better zone to sell at, right? Because if you want to sell at a higher price and close the position at a lower price. So in this case, right, within this whole leg itself, this is basically an area, right? A better area to sell at. So this is your premium zone, right? The terms don't really matter, but what's important to understand is that if you're looking for sells, right, you want to, as much as possible, try and get it above the 50% retracement, which is basically half of this leg. So you can see this area, right? So high to low again, right? So 50% retracement, it's here. I'll just put this in a purple line. So this is the 50% retracement, this area here. Okay, so anything above this, it's a better area, or better zone, right? For sales, because you're entering at a higher price. And anything below over here, right? We could still see a reversal, right? Price could jolly well come to the 38 before it pushes lower. But in terms of looking at sells and buys, right? If you're looking at potential zones, right? These zones over here would be of better entries as compared to the zones here. So this is for sells, right? For buys, it's the other way, right? So buys, we need to take a look at first bullish market structure. So let's take a look at an example on dollar yen. Right, so earlier on, right, let me use this example. So same thing here, right? So using the same example, you can see this is the push up, right? So if we see a push up here and then a pullback, over here, right? So basically, if you want to try and find, if you want to use Fibonacci retracement to find support, essentially this would be the low, right, that we're taking, and this is the high here. In this example, right, this is probably the support area that I would use, right? So of course, this region here. So this area, so you can see that price basically came in, right, tested this region here once, and then pushed higher, so it created some kind of support level here. So when price pushes above, right, and we're trying to find a support area, in this case, right, this would probably be the support region. We would be spiked out of this, right, but this would be a support area. And if you want to practice, again, using Fibonacci retracement to find the support area, this is the high, right? So this is the low, which we will be using as the starting point. This is the high, which we will be using as an ending point. So Fibonacci retracement from low to high, and we will basically try and find a Fibonacci retracement that lines up with this blue zone. So Fibonacci retracement of the move from low to high here. So you can see again, right, 50% retracement. So if you're trying to find areas to buy, you want to try and buy at a lower price. So ideally below the 50%. Okay, so at this zone itself, the retracement that lines up with it will probably be the 61.8 retracement. So again, as always, right, it's not exact, right? So it's not try not to use a specific level, but rather use zones, right? So if you take a look at the supply demand areas, I don't highlight it based on a specific level. I take a look at it in zones, right? It gives me an area to work with. So in this case, you can see that if I were to just remove all these markings, right, and just leave the 61.8 retracement here, essentially you can see this region, right? So this is the support area, and this is a support area because of how price interacted with this areas here, right? So it's only from this area, right, that we even highlighted the support region. But you can see what happens is that price spikes slightly to this area, right, and then pushed much lower, essentially to take out any liquidity. So once there is a support area here, you can see that there'll be many buys, right, at these areas, and they will put their stop losses just slightly below. It can be in forms of breakout, so either stop losses for the buy positions or sell stops, right, if they are playing a break below the support region. So in this case, right, you can see price spiked slightly lower, took out the liquidity here, and then it broke above this area. And once that happens, right, so for those of you guys who take a look at all the blocks, right, so price swept below the low, broke above the previous high that we have here, right? So it broke above the high, and then you can see that this low that essentially sweeps liquidity then becomes a support area. You can see this low here. So this low that basically swept all this orders, right? And price broke above it. It then became a demand area, and price continued much, much higher. Okay, but the main point or the focus on this is really just to identify or to go through how we can use Fibonacci retracements and to find support or resistance, right, in the different situations. Okay, Jeffrey, you can just type your questions under the questions chat. Okay, so yeah, so if you guys have any questions, right, please do put them under the questions chat, right? So yeah. Okay, so if you have any questions, yeah, put them under the questions chat, right? So for today, we have covered mainly on the different Fibonacci ratios. We also took a look at how we can use Fibonacci retracement to find support and resistance. If you're trying to use Fibonacci retracement to find support, right, just take the lowest point and the highest point. So lowest point will be your starting point, highest point is your ending point. If you want to find resistance, right, then the highest point would be your starting point and the lowest point would be your ending point. So as always, right, ensure that you are actually these areas, right, because at every interval you will be able to draw a Fibonacci retracement levels, right? So just make sure that when you're drawing these levels, it lines up with a supply demand area as well on the higher time frame, right? So okay, I have a question by Chong, right? So Fibonacci premium for sell is 0.238 and discount for buy is 0.768, right? It's okay, so for Fibonacci premium for sell, it's actually 0.768. Right? And then premium for buy is 0.768 as well. Okay, so you see this area, right? So take a look at this example, right? So again, premium discount area, right? So let's say price pushed up and it pulls back, right? So this is the last range. So I want to first take a look at the 50%, right? So 50% it's here, right? So 50% it's here. So which means that anything below the 50%, right, I'll be entering at a lower price within this whole zone, right? Yeah, so within this whole zone, right, anything below the 50%, you're entering it at a lower price. So basically buying at a lower price if we expect a continuation of the uptrend. So this is your discounted area. Okay, so anything below the 50%, which means your 6178.6. Okay, so this is for buys. If you want to take a look at examples on sell, you can see that this area here. So let me take a look at another example, right? Let's say on Franken. Okay, so take a look at this example on Franken. You can see here, right? Even if I have to not take a look at the recent one, just take a look at this area. You can see that there is a break-in structure. Price broke the low, right? And then retracement from high to low. So this is the 50%, right? So if I'm trying to find resistance, you want to start from the high and at the low. This is the 50%, right? So you can see that above it would be a better entry price because you're entering or selling at a higher price, right? So essentially 61.8, 78.6. So in both examples, right, premium for sell, that's 78.6, right? That's the higher one. And then discount for buys would be at 76.8. Okay, so you're buying at a discount, selling at a premium, essentially. Okay, so I hope that answers your question. Okay, I see that we have no other questions. Okay, so yeah, I think we don't have any other questions, right? So yep, so that's all that's all that we have for today. Okay, you're very welcome, Samantha. I'm glad you enjoyed it, right? So if you guys want to take a look at Fibonacci retracement in more details, right, do check out the links I've sent on the chat, right? So it actually leads to Vantage YouTube page. So over there, we have different topics that are being covered for our Thursday's educational series. And we also have, for example, the live analysis session, okay? As if you can just type the questions under the questions chat, right? So if you guys have any questions, don't need to raise your hands, just put your questions under the questions chat. Okay, so I'll just leave the questions there. Okay, you're very welcome, Ryan. Okay, so I hope that this session has been helpful, right? If you guys want more in-depth, I think for next week, right, we will be covering the Fibonacci series as well, right? So we will be taking a look at a few more examples and also concepts on market structure, supply-demand areas. And then following which, for February session, right, we will be going into Fibonacci extensions. So following, having understood Fibonacci extensions and how we can use them, we can then actually combine them with retracement levels and look for confluence areas. Okay, so we'll be going into deeper details for that for the next session. Okay, so if we have no other questions, right, that's all that we have for today. Okay, so thanks everyone for joining. For tomorrow, we will be having a live analysis session. And if you want to join this session, right, just go to vantagemarkets.com/webinars, right? So this link here, let me just bring the link up. So this is the link, right? vantagemarkets.com/webinars. You can sign up for the sessions as well as the other check out the other schedules there, right? If you guys have any questions regarding accounts, right, just email support@vantagemarkets.com. Okay, so yeah, with that, we've come to the end of the session, right? Thanks everyone. Stay safe, trade safe, and we will catch you guys again tomorrow.